Welcome to the Indices, and I'm just starting off with the ASX market today, the ASX 200 CFD. Now, the futures market, or the futures CFD, the SPY CFD, is trading at 54.45, which is lower than the 54.60, and the cash market is at 54.35. Now, I've got two counts for basically all the indices, really. There's pretty much a point where we need to push up from these current lows, and this is for the Australian market, the UK, Germany, the S&P 500. They all need to push up from their current lows, and if they take their current lows out, then we're going to be looking at another leg to the downside, quite a large leg to the downside. And in that case, and we've looked at this count here that we're looking at, we've looked at this before, and this is a bit of an ending diagonal sort of triangle pattern. Ending here as such. You know, it's a bit of an odd count, but it's how a ending diagonal triangle sort of pans out. So you know, we could even get a push up to here a little bit and then pull down through here. Would only sort of be reasonably positive bullish if the 5,500 became the support there. So that's something that we need to look at. This is the more bullish count, where we've got this here as an A and a B and a C, and then up for one, an A and a B and a C, back for wave two, up for one, back for two, up for one, back for two. It's looking a little bit sluggish for that count, because it's this type of count should be picking up speed at this point in terms of a wave three. So we've got 3 degrees of wave threes here, and they should be sort of picking up speed. So this current low here is it's critical, and let's just drill into that a little bit further. So in a bit of a nutshell, we were looking on the 4-hour chart, we were looking for this move up through here, and then we were looking, well, we knew that we had 5 waves up here, so we were looking for an A and a B and a C correction, pulling back to the 61.8%. We've got that, but this is really quite a large correction. Do you know what I mean? And compared to this here, this is normally, you know, a correction here would be like 40 or 60% tops of this one here. But it's, you know, it's sort of spending, well, it's just a little, just doesn't have the right look and feel about the right perspective. So look, the current high here, well, we've got support running through here on this trend line. The other thing is we've got resistance running through on this trend line through here as well. The daily chart is oversold, so as you'd expect, being closer to the old low here. So it's, you know, it's got potential to push up from here. The main support area, this little move up through here, let's just drill into that a little bit here, because yesterday we were looking at this pattern through here, and I mentioned that, you know, it's got potential to go up, but it's got more of a bias to go down, being an A and a B and a C here. And, you know, technically it was this low here. We can use the 54.50. We could also use the retested resistance of group 2 here, and using the lower level in here of 54.65. So it was support, and then it became resistance. So that's your bearish bias and set up to sell, and adding over to here and closing out into group 1. Now, the move up through here overnight, a little bit yesterday as well, appears to be quite impulsive. So that means that there's no overlapping wave structures. It's an impulsive structure. Have the 3rd wave, 4th wave, and the 5th wave in here. So we can expect either way. We expect some type of correction to follow in here. But because this is impulsive up here, we should see further upside here. So there is, on the positive side, we've got a market that's oversold, ready to snap back, and it is snapping back, but it's doing it in an impulsive manner, not a corrective manner. The support here, I would like to say 54.50, and it has been tested there, but because this trend up here hasn't been retested, you know, each every little trend gets retested in its own degree, but this whole trend here hasn't been retested. So the support would have to be down at 54.30, the top of group 1 here. So while the market maintains its presence above the 20 and the 30 here, then it's bullish. But below that, and especially with the 54.20 as resistance, then it is bearish at that point there. Obviously, there is supply coming in through here at group 2 here, and it's meeting that group 2 on close now. So, you know, it will struggle from this point here, but it's you know, it's possible to have a you know, Thursdays in a bull market. We're not really in a bull market. Can tend to open a bit higher and then sort of trade lower, and that's okay. You know, we'd be looking for, you know, 50%, 60% retracement level from this move here. And if this move is down through here, as long as it's on low volume, if it's on high volume, we've got a bearish market. If it's on low volume coming down, lower than yesterday, then well, we've got a bullish market. It can be lower volume than the move up through here. So if you find the volume in this whole trend here, and then see that this is less here, I use the average volume per bar, but you know, whatever you need to do. Yeah, so that's there. So we could also say too that 54.72 here, where the supply is at the moment as resistance, if that becomes support, then that's another positive element for further upside here. So we could be at the beginning of a trend moving up, but I'd also suggest that the S&P 500 at 1880 is very critical, and also the DAX at 9,500 is critical as well, as is the FTSE at 6,800 as well. All important numbers that we need as support for a bullish market, and let's have a look at those. First of all, I just want to have a look at the US notes here. And all I want to point out here is that from the low here, the move up through here was in 3 waves. So this is corrective to this point. And then we've got the impulse wave that I was looking for up here. Forget the spike here from the NFPs, but or the Fed's comment. But the point here is that this whole move up can be a corrective rally, but it would need to stay under the 125. But also to the 125 here as resistance, you know, is going to support because if the notes are moving up, then the stock market is moving down. So we could say support on the 125 here would put a bit of a nail in the coffin for the S&P 500. So it's something that we have to sort of watch out for. Now, with the S&P 500 in the bigger picture, there's certainly a case for, and you can have a look at that on the charts in the S&P 500 section. There's a real possibility that the market can roll over and lower and move, you know, back below the 1800 here. So we need to keep an eye on that. But while the market's really sort of well above the 1850 and in the group 2 area here, we can sort of, you know, poke around for a positive wave structure, and we've kind of got that really. And this little A, B, and C here counts very well on the cash market. So you know, it's viable to see new highs here. We can see that the supply level, the resistance, is through the 1880 here, and this is it here, and this is the little move up overnight here. So it's moved up, and it doesn't really have overlapping wave structures. So it's got an impulsive pattern moving up through here, and yeah, looking for support on 1880. But it could certainly fail from here because it hasn't made a new high. The other point that I wanted to point out here too, with just using the levels, this is all group 2 here. This is 65, 72, and 80 here. So in terms of setup and going long, you know, if you went to go long on 1865, you don't take the breakout, you wait for the retest, and then you use these as reference points to buy new highs here, and you keep the stop under the 65. Normally it's 63 when you're using group 2, so 1863. If you're adding to the position or you wanted to exit, you would exit it at 1872. if you're trading for the higher ground, then you'd have to wait for the 1872 to become the support. And you can see that this here is what we call the overshoot pattern, where the market doesn't stop and react. It just goes straight through. So the distance above is normally the distance below. And then over here, when it moves back up through here, you can see that it's got nice support. Not that you know that it's got support here until it breaks up here, but all these are reference points here that you can take new highs on, and then you would trade to the 1880 and get out. So we're waiting for support on 1880 here to confirm a more of a bullish pattern to the upside. Failure to find support here could turn us into quite a big leg to the downside in wave C, which would take us below the 1800. In fact, it would take us down to the 1740 area. So have a look at those charts, and we'll need to be mindful of that. And this also runs through for the DAX as well. So the DAX here, I've got this. This is the daily chart. I just wanted to go over this again. We've got the situation where we've got, this is a triangle pattern here that's completed here. A triangle is always in 5 waves, an A, B, C, D, and E, then up for 1, and we're looking back for 2, and we're pushing up here higher. Now, there is a slight, not a problem with this, but there is an alternative count where the E way over here is not finished, and this would be, if it failed here, this would be in line with the S&P 500. So all of this here would be the A wave to here, and this would be the B wave over to here, the C wave here, the D wave here, and the E wave to come down here further. So it's quite possible for this to occur. So all of these lows here are now extremely important, and also the 9,500. Now, the 5 is the second strongest number in the market, and we can see that it's really the sort of pivot between 10,000 and 9,000 here. So it's, as support or resistance. Yeah, and I was also sort of considering what Gann would say as well, even though I'm not a huge follower of Gann, but I like a lot of his stuff, is it's normally the 4th time when you get triple tops, it's normally the 4th time that it will push through. Now, this one's isolated, this one's isolated, this one's isolated, these ones here are all in the same bunch here. So it's trying to get through. Will it get through or not? So even just a break above these here would do the trick as well. But we'll be looking for a little support on here. So just drilling in through here, we can see that we've got this pattern across the 9.5 here, and we've got it as an A and a B and a C here. On the cash, it's made a new low here, but hasn't on the cash. This has got a new low here because it made it on the futures, and better to take the wave count off the cash rather than the futures, even though you can take them off both of them, but cash is more stable. Look, bottom line here is that 9,400 needs to stay intact and in play, and we're looking for 9.5 here. So, this move up here overnight, as we pointed out on the Australian market and the Dow Jones, is appearing to be positive in terms of its structure to the upside. So we've got up for wave 1 here in 5 waves, wave 2, wave 3, wave 4, and wave 5, and then the correction back. So, end of session, US session finishing, so this is just dribbling on here. But look, we could even say above the go long and keep the stops above this 94.40 area here, but you don't put stops on whole numbers, of course. Look for the odd numbers, but never not 9 either. So I find 6 is the best. So 9.446, you'll get better results at there. I used to have it on 7, but over this year I've seemed to get better results at 6. So, but anyway. It's got to stay above this 9.5 here, and the FTSE is the same as well. I mean, same but different. In a bit of a nutshell, we were looking for, we traded up to the 6 to 8, we got out, we've been waiting, right? And we're waiting for a correction pattern, and we're looking for it in 3 waves. Yes, the market moved up higher, so that's okay, not a drama. We still know that it's going to produce a corrective pattern. So we've got 3 waves here that looks and feels okay as an ABC correction. So the move up through here, the same as the others. So we're looking for support on here as well. That's what we just wait for support. That's what we're looking for. And if you see it sort of, vibrating across here, and eventually if it finds support on 68, 10, 20, and 30, you need to be scaling in through those numbers, and adding and support on 80 on top of Group 1. And this goes for all of them as well, the DAX as well. 68.30 support on 68.30 is the last sort of station out of town that you need to be adding to as such. So let's just see how all of this develops. So we're at the brink of, if we see weakness over the next a couple of sessions, well, then we know we're going to be in a big leg to the downside, and we really got to cover all our long positions and get short real quick. But otherwise, we'll just tempt fate and continue with these intraday patterns here. As long as they hold, we'll be holding long as well in our trades for the UK, US, and Australia. So, but be prepared to change. Alrighty, I think that's it. Australia's got employment figures coming out at 12:30, and there's a China trade balance too, which is tentative, which will come out today. But if that does come out, if that's positive or weak, that will run through all markets, starting in Asia first, and then into London. So that's a bit of a catalyst to look at. On the positive side, as mentioned yesterday, the Fed's Janet still believes that the economy needs more stimulus, and will be holding that up. So keep an eye on the unemployment and inflation on the short term. Alrighty, cheers.